Okay, so if you're not really interested in drama, please skip this first part of the video and proceed with the market analysis component. But with that out of the way, I want to show you guys a comment that I got that I think is really, really important from a trading psychology standpoint. So this person says, unsubscribe. Nick is so bad in forecasting. He thought gold is going down, but no, actually it made again a new all-time high, and it's not the first time he do bad forecasting. And we're not going to make fun of this person's English because, to be honest, I only speak one language, so this might be a person's second language, but what they're basically saying is Nick's bad at forecasting. He said gold would go bearish. And I responded, and this is really important that we kind of discuss this mentality, because you get these kinds of comments all the time on YouTube. But what makes me nervous for these types of people is that they're completely blaming someone else for perhaps what they chose to do in the markets. As always with this channel, I'm not here to tell you what to do with your own trading. I have a system and a strategy and a way of approaching the markets, and I have absolutely not been bearish on gold. I have no short positions on gold. In fact, I have a bullish position currently on silver. That's pretty much what I said. I said I definitely did not predict that gold would go down. Specifically what I talked about in this video right here, and you can go check it out if you want, is I said I found something interesting on gold, and what I found was that COT data showed some net selling by institutional money. That does not necessarily mean that gold has to immediately reverse course and go down, but it is worth noting, and I just pointed it out in the video. I did not say I'm getting short or bearish on gold, but I basically just responded to this person, and I said I actually have a bullish position on silver right now, which moves with gold most of the time due to high correlation. And I said, regardless, I'm certainly not always right, and neither is anyone else. You guys know when I'm wrong, I will point it out, no problem. But I was not wrong on gold. I didn't have any positioning on gold. And then this person said, I understand from this video you saw something strange, that institutionals were shorting more than buying, so I understood you acknowledged that gold could go down. Sure, gold could always go down, but I'm not here saying, oh, because there was a little institutional money selling, that means it's completely bearish. In fact, my system actually has, for the first time in a long time, a directional bias on gold. We're getting a bullish reading on the Edge Finder currently. And for months, if you've been watching the channel, I've been talking about how the Edge Finder's just been giving us a gold neutral reading. Well, we finally got a bullish reading, basically saying that some of the weakness in the U.S. economic data that we've been recently seeing, like JOLTS job openings and services PMIs, showing some weakness for the U.S. market. So what I find really interesting here is now we're actually getting some bullish readings. But I just want to clarify that if you're watching YouTube, whether it be me or someone else, nobody is going to do the work for you. Nobody's going to guide you simply and softly to profitability. Trading is incredibly difficult. And if you're looking for somebody to blame, please unsubscribe from my channel right now, because I don't want those comments. I am not here to do your homework. I'm doing my own homework. I'm sharing my thoughts and opinions. And as always, none of this is financial advice. With that out of the way, and for most of us, I know you already probably completely unsubscribe and agree with that thought process. Let's proceed now to actually talk about markets. So if we talk about gold here for a second, gold getting a positive reading or a bullish reading on the Edge Finder, how do I actually approach this? Because I'm getting a bullish reading here, but the price has gone parabolic. So I can already hear the naysayers kind of being like, Nick, why would you? Yeah, of course it's giving a bullish reading after all the run up has already occurred. But remember that the Edge Finder is not necessarily a technical or a timing tool. It is just, generally speaking, are conditions favorable for sailing right now? It's the way I think of it. So when I get a bullish reading on gold, how do I actually take this and incorporate it into my trading? Well, now I have a bullish reading on gold, so I'm going to actively start to look for bullish setups on the chart. So specifically, I'd actually like to be a buyer of gold, but I've got to, at the very least, wait for a pullback, perhaps to this recent all-time high where we broke out and actually retested and shot off this. So I really like the bullish call, but I need to wait for a proper setup where I can get an appropriate risk management setup. So basically looking to buy this pullback and putting stops in the trade so that I don't, lose too much if I'm wrong about that idea. We do also still have some readings for the Dow Jones, the NASDAQ, and for Bitcoin that I'm watching pretty close, but I don't love the technicals as much right now for those things. So I do remain bullish on things like the NASDAQ, but this chart has been very choppy. I discussed this yesterday. I'm pretty much looking for a breakout through those highs or a retracement to the bottom of this range. Both of those scenarios would be bullish setups for me. But where we currently sit, we're just smack dab in the middle of no man's land, especially with NFP tomorrow, guys. I'm going to probably just wait on it NASDAQ and just see if we can get some confirmation. We might actually see tomorrow a jobs print that the market really likes and we take out those highs, and then excellent. I can look for pullback opportunities to maybe trade that higher. Or maybe the market gets spooked by NFP. Maybe we don't have such great NFP numbers and tomorrow we see a sell-off, in which case, maybe I start to, line up a possible buy trade on the retracement. So I do still like NASDAQ and Dow Jones and S&P, but can't really justify trading them at these levels. Just need to see a more clear setup on the technicals. And the yen pairs continue to move lower here. Yesterday I actually talked about how I made a profit shorting pound yen. Let me pull up pound yen here. You can see it absolutely dropped. And this is the difficulty of markets, right? So I actually closed out my position because we started tagging into the support level, and then we completely broke through that level. Congrats to those who are still shorting the pound yen. And before I get too many tomatoes thrown at me for closing early, I do actually have a trade open right now that's doing very well, that is very correlated to the Japanese yen. And the trade that I'm referring to is the TLT. This is the 20-year Treasury bond ETF. I have been playing around with this trade for some time, but finally seems like we might be picking up some momentum on TLT. Now, if you get a soft jobs print tomorrow, TLT, I think, has the potential to really start to move higher, but we're getting some momentum here forming to the upside. And why do I correlate this to the Japanese yen? Well, take a mental screenshot really quick at what you're looking at. This is TLT. Here's JXY, which is the Japanese currency index. So take a visual picture here and boom. So you can see they're very, very correlated. The Japanese yen and TLT typically move together. So actually the confirmations on the Edge Finder here are giving me some readings that I really like to actually stay long something like TLT. TLT is an interesting vehicle. Bonds typically move sort of independently from stocks. They don't always move together. They don't always move against each other. So there's a little bit of a diversification / less correlation risk here. And the idea basically is if we get some cooling in the US economy, this has been sitting in my portfolio for a while, but could actually start to come alive here if you get some economic weakness. TLT typically does well when inflation is cooling, the Fed is cutting rates, or the US economy is starting to slow. And I'm not necessarily making a big bet that I think the US economy is starting to slow, but what we do see right now is that when we look at like USD JPY, you can see that this thing has pretty decisively flipped bearish. And I think that this is a big indicator to what we're looking at here on a bigger scale of central banks globally. We see the Japanese central bank, or JPY, strengthening because they're actually looking to hike interest rates. You contrast that to places like the US, or by the way, EU, Europe, or we take a look at Canada, right? All these places are looking to actually cut their interest rates. Meanwhile, Japan is actively hiking theirs. So this is a story in which case I actually see some upside for the Japanese yen. Now, this has been a trade that has come and gone from the scope of market pundits for some time, but I do think we might actually have the timing here lining up. That is why I remain long something like TLT, which would benefit from cooling economic data in Western countries like the US, of course, versus the Japanese yen, which again, people may start to get long. It also makes me just a tad bit cautious with indices. Many of you guys might remember here in the last few months, we had a certain sell-off on August 5th. This sell-off coincided with a talk from the Bank of Japan talking about raising interest rates, followed by a cool NFP report. I hope I'm not forecasting something, but with NFP tomorrow and the Bank of Japan talking about hikes on their interest rates, is it possible that we're going to see a repeat of that August 5th kind of sell-off? We'll have to see. But I do remain a little bit more cautious on this market, and I'd like to either see a breakout on indices to look into some long opportunities, perhaps if we get a jobs data print that looks good. But in the meantime, I'm actually going into an NFP report pretty cash heavy and defensive with my TLT positioning. So I like where I'm at. I'm not, if I miss part of the move tomorrow, if we get a big up move on indices, I'll probably just look to buy pullbacks. But there's also the possibility that you get some downside pressure on indices, in which case, I'd be happy to miss out on that if I was, cash heavy instead of sitting long in indices. The dollar index also sitting pretty, kind of stubbornly around 107.8. We've seen sellers coming in pretty hard on this, but also buyers holding this area pretty well. So dollar index, I think, is waiting for NFP report to make a more decisive play. If you get really weak jobs prints tomorrow, probably the dollar index breaks that 107 level, and I could see us making a move down to 106. And this is probably a really important thing for us to cover today. Here is the US economic heat map. And you guys know I love this new feature, and a lot of our customers actually who use the software love this as well. We've been getting a ton of positive feedback about the US economic heat map. By the way, we also have added UK and Europe. And as you guys know, we've been slowly adding more and more to the economic heat maps. Up next will be Japan. I'm really excited for that. But check this out. So when we look at this screen, we're focused on the US here for a second. Part of the reason I think gold, TLT, and the dollar are moving the way that they're moving is because we went from pretty much all blue on this screen to a little bit of red starting to peek through. GDP slipped into the red territory, missing expectations. Services PMIs this week, big miss. That is bearish for the US economy. Retail sales also missed last time around. Unemployment claims came in slightly worse than expected, not a huge figure here. And then JOLTS came in a little bit light. So we're waiting for these key numbers tomorrow, guys. This is really big. That NFP and unemployment rate, if those flipped into bearish territory, you're probably going to see me flip to be a dollar bear completely. Because again, if we get red, now we've just got majority red and we've completely lost our kind of US economics. So for those of you who have Edgefinder, I would encourage you tomorrow after the NFP report, come right here to your US economic heat map. If you take a look at this and you see a bunch of red, right, just be aware that for me personally, that would mean, okay, I'm going to start getting a little bit more bearish US dollar. If we break that support level in the dollar index, again, this is critical stuff. A lot of traders are going to just stare at the charts. I would encourage you to not stare at technical charts all day long. That can be very nauseating. It can be very confusing if you're only looking at technical charts. Start using something like the Edgefinder to help you get a little better sense of what the actual economic data is telling us about where markets might want to go next. This is a bit of a last call, but our Edgefinder sale is ending soon here. We've got 30% off the Edgefinder for you guys who are interested in picking up a copy. It is our premium market software. We have a team of people behind the scenes at A1 Trading that constantly work to improve and add new features to the tool. We've added all these new heat maps and scanners and sentiment tools. All of it is completely free for existing Edgefinder customers. We don't upcharge you for new features that we're adding. I know a lot of companies do that, but we choose not to. We offer a lifetime membership to our software. And if that is something that you're interested in taking advantage of, you should do it right now. The reason I say that is because we do have plans with all the new features and upkeep and maintenance that we have to do to keep this thing running. We have plans to change pricing around this year. So don't miss your chance. Take advantage of a 30% off discount that we're doing right now using the link in the description down below and the promo code that you can find there. Also, you can actually send a direct message to our support team on our website and speak directly to a member of our support team if you have questions about how the tool functions, or if you'd like to a payment plan option, we do also offer that. But again, do not miss your chance to pick up a copy while the sale is live. And like I said, all the information is below. Miko and Marco came on today for our live stream segment. We call it Technical Thursdays, and I asked each of them to share their chart of the days. Check this out. Maybe we can go, Marco, you first. What's your chart of the day?
So for me, it's gonna be the pound and the US dollar.
Okay.
So before this price action, I was actually in a buy setup after this trend up and a flag formation, but I never got the higher low to reduce risk. I do something similar to you, so I never got like a pullback and then a break of the high. And unfortunately, it came all the way back down, took me out for a loss. So that was a bit problematic, but now I have flipped. I've seen a lot of selling pressure. An hour ago, we had the interest rate decision, and I really like this bearish momentum on the 1 hour chart. I'm definitely looking for some entry setups. Like there was just one pullback candle here. It was very small. So I'm going to be looking to get in like a flag formation similar to this one, or just a retest of this level of the low, let's say something like this. And yeah, I really like this chart. In terms of the interest rate decision, well, looks like it was exactly as forecasted and there wasn't much movement, but I like that we are overall confirming this bearish momentum. So yeah, pound US dollar today is gonna be very interesting.
Love that. So looking for continuation to the downside on the pound to dollar. I'll add one thing on the fundamental side that I thought was interesting about the Bank of England's report. So yes, they cut rates as expected, but there was one, and this is just to show you how very sensitive the market is to fundamentals. Is you had all 9 committee members vote that they think a cut is appropriate. And the expectation was for 8 of them to think was a cut was appropriate and 1 to say hold is appropriate. That's how specific. That's how the market is just wired to look at this stuff so specifically. Is the committee members, who of course have a big role to play in what the Bank of England does next with their interest rates. All 9 of them voted that a cut is now appropriate. We call that a very dovish rate cut. So they cut the rates as expected, but it was done so very dovishly because now they're basically all thinking, hey, a rate cut is appropriate. So yeah, I love that chart. Pound pairs are moving right now. Miko, chart of the day. Is it anything pound related or something else?
Actually, something else.
Okay.
Excuse me. Silver looks really good. We've seen a lot of upside for gold recently, and it looks like silver is starting to pick up the pace a little bit. So I'm looking for buy opportunities on this one. And what does take my interest is a retest of this high. A little bit more intraday, but I do like the setup here around 31.6. If we could see a reaction there, I will be looking to see if we can at least trade it back to the high. But why I do like silver is that the longer term move looks pretty likely. We're still seeing higher highs and higher lows on the daily chart, and we're just about taking up the highs here on the left, which is a positive sign because it means that there's a less likely chance that we do have a big sell to the downside. So yeah, I'm very bullish on silver, keeping an eye on the retest of that zone, not too far away. So yeah, silver is definitely the one market I'm looking at the most.
Many traders don't know this, but a lot of trading profitability is dependent on you using the correct brokerage when you're trading. Remember that your trading costs are an input to your trading results. So what I mean by that is trading costs such as commissions and spreads and swaps and overnight holding things. All of that plays into your final results as a trader. And another huge thing that I cannot emphasize enough is you making a deposit into a brokerage account can earn you some significant trading perks if you use the right offer links. In the description down below, we have put together a collection of some of our partnered brokers that offer welcome bonuses when you make a deposit, free stock shares when you sign up, and access to some of our products for free. On our website, a1trading.com/brokers, that's a1trading.com/brokers, you'll see a list of free offers that you as a client to these brokers can get upon sign up and deposit. Do not make the rookie mistake of just signing up for any brokerage and not using a specific offer link. If you use our referral links, you'll get something out of it, and you'll also be supporting our work here on this YouTube channel. Thank you for watching. We'll see you next time.